Bollinger Band trading signals occur when there is a crossover among stock close prices and technical indicators' lower and upper bands. Therefore, we have bands crossover type of trading signals, in which a buy signal occurs when the previous close price was less than the lower band and the current close price is greater than the lower band. On the other hand, we have a sell signal if the previous close price was less than the upper band and the current close price is greater than the upper band. Parabolic stop and reverse trading signals occur when there is a crossover among stock close prices and corresponding technical indicator. Therefore, we have stop and reverse type of trading signals, in which we have a buy signal if the previous close price was less than the parabolic stop and reverse and the current close price was greater than the parabolic stop and reverse. On the other hand, we have a sell signal if the previous close price was greater than the parabolic stop and reverse and the current close price is less than the parabolic stop and reverse. Great. So let's go back into our Python PyCharm IDE so that we can study Bollinger Bands and parabolic stop and reverse trading signals with greater detail. Excellent. So here we are back within our Python PyCharm IDE. In this lecture, we'll be working within Bollinger Bands and parabolic stop and reverse code files. If you have any question about their setup, please go back to section 1, Stock Technical Analysis Data Lecture, where all of that is explained with greater detail. So first we begin with Bollinger Bands. As they are meant to be standalone type of files, first we import our packages, then we read our corresponding data, next we calculate our technical indicator together with its chart. As a reminder, we calculate upper, middle, and lower bands with certain characteristics, such as 20 days, 2 standard deviations for the upper, and 2 standard deviations for the lower bands, and a moving average type equals to 0, which is a simple moving average. Again, these are the characteristics commonly used with this technical indicator, but you can modify them according to your needs. Excellent. So now let's calculate our bands crossover type of trading signals. First step, previous period's data to avoid backtesting bias, meaning we are going to implement our trading signals one day after that we observe them. Therefore, we are going to calculate our previous period's close price, lower and upper bands. Also, second previous period's close, lower and upper bands. For this, we go into our SPY data frame, locate the corresponding column, such as close here, and we shift 1 position for 1 day and 2 positions for that second day. Then we generate our corresponding trading signals, in which buy equals 1, sell minus 1, do nothing equals 0. For this, we generate the corresponding column where we're going to store it, which is BB sig, and initially it's equal to 0, or all of them do nothings. But we are going to create a variable with the same name as the column, equals to 0, which we are going to use within our for loop. For loop is for I, R in enumerate SPY iter rows, meaning that it's going to go through all the rows within our data frame in each loop, and then semicolon it's going to ask the first conditional. If our second previous close prices were less than the second previous lower band, and our previous close prices were greater than the previous period's lower band, then we have our corresponding BBSig equals to 1 or a buy signal. If this is not the case, we enter this second conditional, which is elif or nested if within the original one. And we're asking if our second previous close prices were less than the second previous period upper band, and the previous period close prices were greater than the previous period upper band, then we have BBSig equals to -1 or a sell signal. If none of these conditions is met, we have else, which is 0 or do nothing. In all the 4 loops, we're going to be updating our original data frame SPY with ilog in corresponding I row from the one in our for loop and 15th column where we are storing the corresponding signals with the values we obtain within these conditionals inside the for loop. Next, we're going to do our corresponding trading signals chart. For this, we are going to call it fig2, AX equals plt.subplots, two of them which share x as true. In the first one, which is our x as 0, we're going to plot close prices, upper, middle, and lower bands, and all of them with a line style which is dash type. Then we are going to add their legend located at the upper left. On the second subplot, located at position 1, AX1, we're going to plot BBSIG, or the trading signals, with a marker equals to O, or dot type marker, line style equals blank, so there's no line connecting the dots. Then we add also the legend at the upper left, and we add a superior title, which is SPY close prices and Bollinger Bands BB with its corresponding characteristics of 20 days and 2 standard deviations. Then we show the chart. So let's proceed to run the code by clicking the right button on the mouse and scrolling down into Run Bollinger Bands. As you might remember from previous section, this is our original chart with our close prices, and then we have as dashed in green middle band, orange upper, and dashed red the lower band. So we're going to continue right here. This is the chart we just created, so let's make it at a full screen, which needs to be done manually because of the screencast. There we are, and all the way into the bottom. Perfect. So we have here SPY close prices and Bollinger Bands BB for 20 days and 2 standard deviations. At the top we have our corresponding prices. Solid blue close prices. Then we have, as in our previous chart, dash type, orange upper, green middle, and red lower bands. Then we have the other subplot, in which we have our trading signals. One is buy, 0 do nothing, -1 is sell, and both of them share our horizontal axis, which are dates from the beginning of 2016 to the beginning of 2017. So let's zoom into some part of the code so that we can observe our corresponding trading signals. Let's say that we do so from here all the way into this part. There we are. Excellent. So as you might remember, whenever our close prices crossed from below to above the lower band, which is the red dash colored one, then we had a buy signal being implemented, which is this one right over here. And then, on the other hand, whenever we had our close prices crossing from below to above the upper band, which is the orange dashed one, then we have the corresponding sell signal. As always, if you focus on the bottom left hand corner here and use your mouse pointer, you can see the precise value of the coordinates within the chart. So this is how Bollinger Band trading signals work. So let's close this chart. We also close this one and the last one, which we'll study later on. So let's proceed to the last of our lagging indicator based single indicator trading signals, which is parabolic stop and reverse by double clicking on the file. So we scroll to the beginning, similar structure, therefore it's a standalone type of file. We import our packages. Next, we read our data. Next, we calculate our technical indicator. Notice that we have an acceleration factor of 0.02 and a maximum acceleration of 0.2. Again, these are the characteristics commonly used for this technical indicator, but you can modify them according to your needs. Then we proceed to do its charting, and now we can do the stop and reverse type of trading signals. So first of all, we calculate previous periods data so that we avoid backtesting bias. Then we generate our trading signals, buy equals 1, sell -1, and do nothing equals 0. We create the column where we're storing the signals, in this case is SAR sig, and then we substitute with the corresponding variable with that name inside the for loop. So what we are asking in this for loop is if our second previous close price was less than that second previous parabolic stop and reverse, and the previous period's close price was greater than that previous period's parabolic stop and reverse, then our signal is equal to 1, or we have a buy signal. If this is not the case, we enter the nested if or elif, in which we ask if our second previous period's close price was greater than the second previous period's parabolic stop and reverse, and the previous period's close price was less than our previous period's parabolic stop and reverse, then we have -1 signal, which is a sell signal. If none of these two conditions is met, then we have 0, which is do nothing. In all cases, we'll be updating our SPY original data frame in that column we created with the signals we obtained in each of the loops. Next, we're going to do our corresponding chart, which is a subplot of 2 of them. In the first one at position 0, we're going to chart our close prices with the overlay, which is our parabolic stop and reverse, consisting of marker O or dots with no lines connecting them, and below we are going to chart the corresponding signals, again with the marker O and the corresponding line style. As we can see here, it's blank, so that there's no lines connecting them. In both cases, the legend located at the upper left. Then we have the title of the chart, SPY close prices and parabolic stop and reverse with its characteristics, which is our acceleration factor of 0.02 and a maximum one of 0.2. And we show the chart. So let's proceed to run the code by clicking the right button on the mouse and scrolling down into run parabolic stop and reverse. So the first chart is the one we studied in our previous section, which is close prices in blue with a solid line, and then the corresponding dots, which are the parabolic stop and reverse. So we're going to close this chart and going to focus on the one we just created by making it a full screen manually because of the screencast. So we do so right here. Excellent. All the way into the right and all the way into the bottom. Perfect. So we have SPY close prices and parabolic stop and reverse, SAR, with acceleration factor of 0.02, 0.2, which is the maximum value. At the top, we have our corresponding close prices in a solid blue line and the parabolic stop and reverse, which, as you might remember, it is such as here. We have an uptrend, stop and reverse, downtrend, stop and reverse, uptrend, etc. That's how it works. Then we have the corresponding trading signals in that second subplot. 1 is buy, 0 do nothing, -1 is sell. They share the horizontal axis of dates from the beginning of 2016 to the beginning of 2017. So let's focus on some area to just visualize the corresponding signal. So let's say we do so right over here. Perfect. So as mentioned, whenever we had a change, like in this case in which we are going from a downtrend and stop and reverse into an uptrend, then we have the corresponding buy signal. And then whenever we have our corresponding, such in this case, uptrend, and we change into a downtrend, then we have the corresponding sell signal being implemented 1 day later. So this is how the parabolic stop and reverse works. So zooming out just by scrolling back. Excellent. So let's close this chart. We're also going to close the next ones, which we'll study later on. So again, we finished with lagging type of indicators with single indicator trading signals, and now we're going to still continue with single indicator trading signals, but in this case with leading type, and we'll do so with our average directional movement index together with our commodity channel index, and those will be our following objectives.